Hello everyone, welcome to another episode of Bazaar Ki Baat by Advisor Coach. Today in Bazaar Ki Baat, we have Mr. Harshad Patwardhan, Chief Investment Officer with Union Mutual Fund. Welcome Harshad to in Bazaar Ki Baat by Advisor Coach.
Thank you very much. Thanks a lot for inviting me, and hello to all your viewers.
Thank you very much. So Harshad, just to understand this, you're an ITN from Mumbai, then an IM Lucknow management, and then a CFA. So what led you कि आप after doing so many professional degrees and in engineering and a management background, you chose to come in this investment professional management business. If you could just take us through your personal and your professional journey.
Sure. No, thanks for this question. It takes me back 30 years ago
Hmm.
because that was, most of my relatives would ask this question to me. Engineer बन के ये क्या कर रहे हो? So, I must be, very candid. I think I probably got into this industry by accident almost
Hmm.
because if I passed out in 93
Hmm.
from IIM Lucknow, and, I'm sure, you will recall that period when the economic reforms in India had just started.
Hmm. Hmm.
So I will give credit for my entry into this industry to probably PV Narasimha Rao and Manmohan Singh. Because that was around the time when lots of foreign broking houses were coming into India, foreign institutional investors were coming into India. And for anybody who were just out of college, it was an exciting new industry to get into.
Hmm. Hmm.
And that's how I sort of almost accidentally came into this industry.
Hmm.
And I don't regret it a bit at all. If I have
Hmm.
to do it again, I will probably do it the same same way. Because in which other industry, and you have been from the industry also, in which other industry? So first 12 years of my career, from 94 to 2006, I was on the sell side. So I
Hmm.
was
Hmm.
part of the research team of many institutional brokerage houses. The longest being in Jardine Fleming,
Hmm.
which was later acquired by JP Morgan. So my longest stint was in JP Morgan, and my last stint was in Deutsche Equities uh, from 2003 to 2006. But in which other industry you get to meet the most successful managers in the industry, CEOs,
Yes.
CFOs, entrepreneurs,
Yes.
exciting stories. And on the sales side, in which other industry you get to meet very successful international fund managers, who are not just investing into India but investing into other emerging markets.
Hmm.
So personally, for me, it was a very very rich experience being on the
Hmm.
sales side, because pitching ideas to very very successful, very smart fund managers was a great learning.
Hmm.
What I would say for my buy side career later.
Hmm. Hmm.
Uh,
Hmm.
so so 94 to 2006 I was on the sell side. 2006 is when my ex client was starting a asset management company in India, and they asked
Okay.
me whether you would like to join,
Acha.
and I jumped at it.
Which one was that?
This was JP Morgan
I
Jardine Fleming
see.
Asset
Oh,
Management.
yeah.
They were also my client, one of the
Right.
biggest clients. And it was an honor that the main person there called me saying that, would you like to join? So I jumped at it. So
Hmm.
2006 to 2016, I was with JP Morgan Asset Management
Right.
as their head of equities, CIO equities. 2016, as you know, JP Morgan decided to exit India. So Edelweiss
Hmm.
Asset Management actually bought those schemes. So I
Hmm.
continued in the same role for next 5 years
Right.
in Edelweiss. So,
Hmm.
so first 12 years of my life on the sell side, and then almost 18 odd years now on the buy side. So I would say, very exciting journey. And this is one industry, and you will agree with me, where there is not even a single boring day. Every day something or the other is
Absolutely.
happening. You are
Absolutely.
learning every day.
So exactly, such a wonderful journey, and 12 years with sell side and 18 years with buy side. Absolutely incredible. In fact, when I joined this industry a few years ago myself, I said, wow, what an industry, where you're getting to learn so much. रोज कुछ ना कुछ बदलता है, रोज
and
कुछ ना
yet
कुछ सीखने को
and yet
मिलता है.
and get paid for it.
and get paid for it. All you have to do is go to someone and teach them about it and build that relationship, and business comes naturally because there's a lot of value addition happening.
Mhm.
Wonderful. So, today, Harshad, this Bazaar ki baat conversation is happening at a very interesting time. I think isse better time nahi ho sakta tha. And I think this conversation actually can go for hours together. But of course, I know you have a busy schedule. So today we are having a lot of activities around us, geopolitically, geoeconomic, etc. So today, an investor is quite worried, when he's seeing the markets going through peaks and then its lows and peaks and lows. And as we spoke today, the markets have actually closed at above 1,000. I'm talking about the BSE Sensex. So, do you believe that the markets across globally and specifically in India have factored the actual geopolitical situation going around and the impact on the geoeconomics? Number one. Are you comfortable with the valuations, particularly on the broader market side? Broader markets, more mid and small and mids, etc., because that's the place where a lot of money is flowing as well. And what would your suggestion be to an investor, who is ready with, let's say, some inflows to be made? Should he wait, or should he stagger, or should he just jump into the market? What are your
Okay,
thoughts around it?
sure. So if I forget any of your sub questions,
I
please
will remind
remind
you.
me. So you're right that things are very hazy right now
Hmm.
because lots of things happening, and the more immediate one is what is happening on Iran-Israel equation. Right? Of course, Ukraine-Russia war is also there. The tariff war is also there. But I think of more immediate interest is what happens in the Middle East.
Very
And
true.
why do I say that? I say that because it has big implications for what happens to oil prices.
Correct.
And oil prices, see, Indian economy, I don't think we have too much time to discuss that. But the macroeconomic fundamentals of India have improved a lot in a relative sense over the last 10 years. But there is just one thing, one variable, which India cannot hedge
Hmm.
against, and that is the oil price.
Hmm.
So many of the positives on the current account side, on the fiscal side, on the inflation and interest rate side can be nullified if oil prices were to rise, because that is a non-discretionary import for India.
Hmm. Hmm.
And
Absolutely
you
correct.
can't really replace it in
Hmm.
the short to medium term.
Hmm.
So that is an area of most interest to me. What happens to oil prices? Now, as you know, it is incredibly difficult to say what will happen over the next few days, whether US
Hmm.
gets involved. And but I would say the worst case scenario right now could be that if something happens, drastic happens, and oil prices shoot up above
Hmm.
$100 and
Hmm.
$125, that is bound to impact, bound to have a knee-jerk reaction in our markets.
Hmm.
And I will not be surprised that the market falls quite a bit if that were to
Hmm.
happen.
Hmm.
The critical thing to focus on is how long will the prices stay high for a long period of time. My base case is that even if the oil prices do spike, they will probably come back, fairly quickly.
Hmm.
Within I would say days and weeks, and not months and quarters.
Hmm.
If it is prolonged over several months or quarters, then it can start to have a damaging impact on the
Hmm.
economy and corporate sector.
Hmm.
But if it is a transient phenomenon, then yes, there will be knee-jerk reaction, but
Hmm.
you don't really have to worry too much. But
Hmm.
which way exactly things are headed, I don't think anybody can really speculate about that.
Absolutely.
So that was one question. Sorry, what was the other? Okay,
So,
you asked about.
do you
Yeah.
think the markets have factored in this entire situation around?
No, I don't think market has factored in oil
Hmm.
prices going above 100 at all. So that will come as a root.
And particularly the geopolitical situation, which could really escalate in the Middle East a big way.
I don't think I think there is a bit of a complacency about that.
Hmm. Hmm.
There is a hope and expectation that things will die down soon, and that might still happen, right?
Hmm.
But if the oil prices do shoot up, I
Hmm.
definitely see a knee-jerk reaction in the market, and some kind of a panic will come in,
Right.
leading to both foreign investors also to immediate reaction will be to sell, and that will also spook the domestic investors. People will rush to lock in the profits that they may have made in
Hmm.
positions, and so on. But
mm.
I really don't think there will be. My base case, as I said, is no durable damage to
Right.
economy or corporate sector earnings. As far as the valuations, I think that was another part of
Mm.
so
On more on the larger broader markets.
that's right. So, as far as I would say the large caps are concerned, with Nifty as a proxy, I
Mm,
don't think the valuations were ever in a concerning zone. Yes,
mm,
it was not a no-brainer for a long time, but they were definitely not excessive. Even I would say 6 months ago. Uh, Mid caps and small caps, yes, the valuations had gone, out of kilter to an extent. There was a lot of euphoria in
mm,
pockets, as we know, and the correction subsequently that we saw since end of September, where the mid cap and small cap indices corrected fair bit, individual stocks have corrected a lot more.
mm,
And to that extent, I would say that the worst of euphoric conditions is behind us. So I would say that compared to 6 7 months ago, valuations even in a broader market are more palatable.
mm. Sure, sure. And what would you suggest to an investor, let's say, who's ready with some inflows to be invested into the markets, to the equity markets? आप क्या सलाह देंगे उनको?
So I would, not advise them to rush
Mm,
headlong in the market.
mm,
I would, in typically in this environment when you don't know how
mm,
things will pan out over the next few months, I would say the best way to go about it is to do an STP, uh, maybe 6 months STP, because hopefully by that time even we will know what happens to the tariff
mm.
wars, for example.
Very true.
And clearly the situation in the Middle East in 6 months' time or even 3 months' time, we will know much better how things
That's
are
right.
panned out. So
That's right.
spreading it over a period of time is how I will look at it. Also, if for some reason, as I said, the worst case pans out, and even though briefly the oil prices do shoot up,
Mm,
people who are courageous enough
mm,
may want to deploy some money
mm.
at that panic bottom. But in theory, many people will say they will do that, but I'm sure 80% of them will not have enough courage.
Absolutely, absolutely. No, no, you're so right because if Iran was to block the Strait of Hormuz, you will see the oil prices spiking up above $100 in no time. And
That's
you've
right.
already seen, the rupee feeling the heat towards the dollar
True.
at the same point of time as what we see, because almost 20% of the global supply chain comes from there of oil.
True.
Correct. So, any near-term event, any very near-term event, which you believe investors should watch out for right now?
I think near-term event from a international perspective is clearly what happens in the Middle East. That by far is the most important one.
Mm,
And
mm,
post that, I would say, is July, mid-July, is when the 90-day extension that President Trump talked about
mm.
for the reciprocal tariff that
Right.
comes to an end.
8th
So,
July. Yeah.
yeah, that's right. So, around that time, and specifically now concerning India, around that time, whether we have a bilateral deal or not,
Mm.
I think so. These two events I will watch out for. One is, the actual war, and the other is the tariff war on
Absolutely.
both fronts. Yeah.
Absolutely. Yeah, the world has completely moved to a narrative war right now, in terms of what the narratives keep changing, the markets react to that as well. Just one question, which comes to my mind is that, we have a lot of happiness around that, we become the fourth largest economy, right? But is it really something that big for us to be very happy about and cherish, in particularly when we look at the GDP per capita gap between us and some of the countries which fall far below in the GDP ranking. We are far below. However, on the triple P terms, PPP terms, we are much ahead as well than many such economies. So, just to bundle my question, what do you believe? This data is trying to say, and the consumption, particularly, because that's what we all talk about in India, right? The consumption story, the manufacturing story. We're also hearing about the India First policy. The cost of production being the lowest, etc., etc. So, what do you believe of this consumption outlook for India? Just few thoughts on that.
Sure. So, first thing that you said is, Indian economy, fourth largest and all, these are all numbers. And
Hmm.
I think what is under our control, as in the government's control, is to, keep growing at a
Hmm.
fast rate. Because what is very important, and we don't really talk a lot about it in the markets, is also to reduce poverty, and which has happened quite significantly, because
Hmm. It
then
has.
more and more people will come in the consuming class,
Hmm.
right? So from a long term perspective, that is very, very important.
Hmm.
So I think, if you look at what we have achieved over the last 10 years, I was alluding to that in terms of macroeconomic fundamentals, in a relative sense compared to other countries, I think we have done a fantastic job
We have.
in terms of, fiscal deficit trajectory, in terms of current account deficit trajectory. This whole success story of services exports
Hmm.
counteracting the
Hmm.
goods deficit, current account deficit. All that is, very durable and very
Hmm.
laudable things that we have achieved. So I'm sure the government is very, very focused, and so is RBI, very focused on growth. And so right now, Indian economy, corporate sector is very robust, I would say, in terms of health. But what you were alluding to is exactly right, that the consumption outlook is weak.
Hmm.
The vigor is not there.
Hmm.
So it's like somebody who, whose health parameters look perfect, but probably there is some sugar shot that is required,
Hmm.
some energy that is required, and
True.
energy is
True.
required both in terms of consumption and also in terms of corporate capex.
Hmm.
Because over the last 10, 12 years, a lot of heavy lifting on investment has been done by the government and government entities.
Right.
Private sector, I would say nothing has happened, but on a large scale, on an aggregate basis, private sector has not been a contributor, big
Hmm.
contributor to growth.
Hmm.
And for our economy to keep growing, and more and more people benefiting, etc., consumption and private capex need to pick up. And if you
Absolutely
look at
correct.
the steps taken by the Reserve Bank of India
Hmm.
lately, and also government of India, and I'm sure more steps will come, is essentially to induce both consumption as well as private capex. So that will really make this growth journey more sustainable. And what you are referring to is absolutely right. Ultimately, what is important is per capita basis. But there is no shortcut to that. You have to
There is.
basically keep compounding on an overall basis and make sure that the growth is as inclusive as possible.
Yeah, yes. And more of privatization, I do believe even it will kick in the gig economy as well, which will lead to further consumption. And we're actually not seeing that robust growth in the gig economy in our country as well, while because we as a country, we're one of the largest gig economies across the world.
Correct, correct, absolutely. So I think government also needs to do what the government has also been doing for the last couple of years at least, and which is,
Mm.
I think, important from consumption side, is
Right.
also, social welfare programs.
Absolutely.
Especially at the bottom of the pyramid, government
Mm.
needs to spare some cash to support them, and that also will lead to consumption. And
Absolutely.
if you recall the tax cuts
Mm.
that the government did, that was clearly an attempt to leave more money in the pockets of consumers,
Mm.
and hope and prod them to
Mm.
consume that money,
That's true.
use that money for consumption.
That's true. That's true. So keeping in mind with all the, things happening around us, what's the near-term changes, Harshad, have been done in your equity portfolio specifically? Just highlight a few, please.
Sure. So, I will highlight two. One is because of the, extreme volatility and as I said, things are very unclear because so many things are happening on the tariff front, real war front, oil, etc. What we have done is we have looked at our portfolios and reduced some of the, outsized bets,
Hmm.
both on the overweight side and underweight side. Because if you observe the markets, how it has behaved over the last 12 months, both sectorally and factorally, there is too much of rotation happening pretty fast. Because frankly, nobody can really look beyond 2 months and 3 months, because there are so many uncertainties, layers of uncertainties, and the possible outcome, the range of possible outcomes is very large. So we have reduced excessive bets both on the overweight and underweight side.
Sure.
Sectorally, there are some sectors that are emerging, which probably will be very positive from a long to medium term perspective, looking beyond the current fog of uncertainty. One clearly is this whole in the capital goods side, this whole defense.
Right.
I think not just in India, but look at what is happening globally.
Across the world.
I think this is one multi-decade theme that I can think of.
Yes.
So
Yes.
we are trying to reflect that in the portfolios. And also, I would say on a power transmission and distribution side,
Hmm.
that is another, I would say, multi-decade global theme that is, getting stronger by the day.
Sure.
So some of that we are trying to reflect in our portfolios.
Sure. Have you increased your cash compositions in certain portfolios, or you're maintaining on an average what you were always maintaining?
So for most of our open-ended funds, we have a policy of not taking cash calls,
I see.
because the whole idea being that asset allocation decision has
Correct.
already been made by the investor in conjunction with his advisor.
Hmm.
It's not our job to do the cash call.
Right.
But
Right.
in certain mandates where we can, we have increased cash a little bit.
Sure. Sure. And it's always better to be more in defensive sectors or stocks instead of cash, which
That
are,
is right.
lesser vulnerable to all these market
That's right.
disruptions.
So in open-ended ones, we have a policy of not taking cash call.
Sure, sure, sure. So through this Bazaar Ki Baat, what one message you would like to give today to investors, mutual fund distributors, and advisors uh, on the current market situation and the way ahead? What one advice? And the other question is that, uh, and this question is to you personally, is Mr. Harshad Patwardhan currently, pessimistic, cautiously optimistic, or optimistic about the India story, at least for the next one decade?
Oh, so the second question is very easy to answer.
Right.
If one decade is what you're looking at,
One decade.
undoubtedly very optimistic. I think a lot of hard work, heavy lifting has already been done in terms of structural
Mm.
reforms like GST. A lot of reforms on the banking side, etc. So if we get a tailwind of relatively stable geopolitics for a
Mm.
few years, I think we should really be flying higher and higher. So
Mm.
undoubtedly very optimistic from 10 years perspective.
Sure.
Coming to your first question, we are chatting right now in probably when there are at least two big wars going on globally, right? And as I said, the more relevant for us is what's happening closer, which is in Middle East. What I would, leave one thought with all your viewers is that to remember that yes, right now the extent of uncertainty is of a higher order than normal, but in general, if you observe markets, volatility is in the nature of the markets. So one shouldn't really be scared of volatility.
Mm.
It's just the nature of the markets. And remember, for long-term investors, volatility actually is a friend, right? So it's very important to control one's emotions
Mm.
and not panic when bad news hits,
Mm.
because what tends to happen is bad news gets reflected in the markets pretty quickly. So for long-term investors, volatility is as a friend, and there are ways of benefiting from that volatility. In terms of,
Mm.
I already mentioned that if you're looking to deploy something, spread it out. But I
Right.
would say something like an SIP is a great way to overcome this volatility,
Very true.
and in fact, benefiting from it.
Absolutely.
uh, Particularly I would say in small cap, mid cap, or innovation kind of mandates, which tend to be small and mid cap heavy. You will actually benefit investing through an SIP than investing lump sum, because you actually benefit from the intermittent volatility.
Absolutely correct. And this is the only way I think where one discipline needs to be brought in, where the investor return and the investment return should kind of start merging.
That's right.
And that's the only way when you don't play around with your investor return too much. Allow the discipline and let the investment be very boring because it's being managed by professionals by you.
Correct.
Great, great. Thank you very much. So, for our viewers, this is Mr. Harshad Patwardhan, Chief Investment Officer with Union Mutual Fund in Bazaar Ki Baat by Advisor Coach. Thank you very much, Harshad, for joining in today and taking us through these wonderful, insightful thoughts as to what you believe of consumption, the geopolitical activities, what changes have been done in the portfolio. So thank you very much. It was wonderful interaction with you, and hope to definitely have multiple such wonderful interactions with you ahead as well.
Sure.
Thank you.
Thank you very much. Really appreciate. Thanks for having me, and I really enjoyed the discussion.
Thank you very much. Thank you.
Thank you.
Good day.
Bye.
Thank you.